Welcome back. You're still tuned into Trading Hour. We spoke about the equity markets. Important to talk about the commodity space as well. Manisha is joining in today, and today we are focusing on crude oil. Manisha, a big fall here?
Well, yes, even as we are looking at all-time highs in gold and good gains in the industrial commodities, what hasn't done well this week is the crude oil prices. We're down by 6%, and this is the low, biggest weekly decline that we have seen in last 6 weeks coming in for the crude oil prices. We did start the week with almost $80 a barrel, and we are holding around that 74-75 mark on your screens. From the lower side of the level, there is a bit of a gain, and this is after the Chinese numbers coming in slightly on the stronger side. China is the largest consumer of crude importer as well, and with the strong numbers coming in, we have seen some support come into the prices there. Also, when you look at the recent statements coming in from the Middle East, those have eased the concerns about immediate supply disruptions or escalation of a war in Middle East, and that has led to prices come off their highs as well. The main thing that the street is looking at is the global demand growth concerns for this year and the next as well. When we started this year, the street did believe that the China numbers will finally stabilize and you will look at higher numbers. That hasn't happened. Having said that, with the kind of numbers that we are working with, Citi came out with a report overnight, and they believe that 0.9 million barrels per day of a demand growth is what we've seen in this year, and their expectation is 1 million barrels per day in 2025 as well. This is exactly what IEA also had mentioned within this week as well, 0.9 for this year and 1 million barrels for the next year. The higher numbers are continuing from OPEC, even as OPEC has cut demand growth expectations for a third straight month. Their numbers are still on the higher side at around 1.9 million barrel per day for this year, and slightly lower at 1.6 million barrels per day in the next year. So this is all about supplies, higher inventories, spare capacity with OPEC at around 5.5 million barrels per day, and then of course no supply disruptions really. So that continues to weigh onto the markets going forward.
Thank you very much for that. Get into a break. We'll come back and get chatting about the NBFC sector. Post the recent RBI action, names like Manappuram General Finance have fallen close to about 12-13%. Kaitav Shah from Anand Rathi Institutional Equities joins in next.